Hey, I'm Zach McDonald, your real estate agent with Real Property Associates, and today's question that every home buyer should ask is, what is an appraisal? An appraisal is a third-party evaluation of the value of the house. So the bank will send a third party out to the house that you're purchasing. And well, I guess you don't have to be purchasing the house. If you already own the house, you can still get an appraisal. But this third party comes out and they do an analysis. So they're going to look at comparable sales. They're going to, generally on a residential purchase, the way that they come up with a value is by comparison. So they'll look at comparable homes to yours in a similar area. They'll look at homes with similar features and benefits to yours. And they'll take all those homes together and they'll come up with what they think the value of your home is. This information is then given to the bank, and the bank will base the amount of money that they will lend on this appraisal amount. So if the appraisal comes in above the purchase price, which does happen sometimes, we're good to go. Process is going to move forward. The bank will lend all the money needed for the purchase. If the appraisal comes in at value, which I'd say is the most common, majority of the time, that means the appraiser says the house is worth what the buyer's paying. The bank says, good, we're good to go, and they're going to lend the money needed to close on this purchase. The problem or catch is when the appraiser, and this happens, I'd say less than 10% of the time, but it does happen. I have to deal with this a few times a year. The appraiser says the house isn't worth what the bank or what the buyer is paying for it. Now, again, this is one person's opinion, and I honestly don't really like the appraisal method that much because an appraiser is giving an exact value to a house, and a house is worth what somebody's willing to pay for it. And a house is not generally worth a specific dollar amount. It's worth, there's a range. So when I talk about value with people, I talk about a value range, and I talk about what somebody's willing to pay for it. And an appraiser just comes in and says, this is how much the house is worth. So there's inevitably a little bit of a flaw to that system, I think, because it's hard to pinpoint an exact value for a house. But that's the appraiser's job. And the bank will take that number and base what they're willing to lend on based on that number. So if they say, the appraiser says the house isn't worth what the buyer's paying for it, there's a couple options, there's a couple things that we can do in this situation. The first thing that we can do is the seller, I guess it's going to be the seller. So as the buyer, if you have a financing contingency, all we do is say to the seller, the appraiser says the house isn't worth what we're paying. And then the seller can do a few things. They can get a reappraisal, so they can, out of their own pocket, pay for a different appraiser to come out and evaluate the property. If that appraiser says that the house is worth what you're paying, then we're going to be able to move forward. The bank will take that new appraised value. If they don't want to do that, they could drop the price to meet the price of the appraisal. So the appraisal was $5,000 below the value or the purchase price. They could drop the value of the sale, or they could say, tough, we're not gonna, we don't want to work with this. And then as a buyer, you have a decision to make, because if you decide that you want to move forward with the transaction, that just means that that extra money is coming out of your pocket. It's either going to be an increased down payment, or potentially you can restructure your loan so that you're putting less down, but not actually putting in more money. That's the most common way that gets resolved. But also as a buyer, if the seller is not willing to work with us and the appraisal comes in low, you can back out of the transaction. It's an opportunity to back out on that financing contingency, or maybe an appraisal contingency if you have a separate contingency. And that's an opportunity for you to say, I don't want to buy this house anymore, and back out. Like I said, though, appraisals are one person's opinion, and they're giving an exact dollar amount, which I think is inherently flawed. But that's the way the system works, and I guess I couldn't really figure out a better way or propose a better way for it to work. But that appraisal process is really important, specifically on the financing piece, as a buyer is applying for a loan and applying specifically to purchase that house. So the appraiser is going to give an exact value, and the bank is going to base the amount of money they're willing to lend on that appraisal value. And what we want is an appraisal value either above or at the purchase price.